Okay, let's see. Okay, so basically tonight's objectives, and I'm just going to, I'll just leave it as is for now. So basically, I want to make sure that everybody on the call understands candlesticks. I get that question a lot. When I was in Ohio this weekend, some people had questions on that, and someone posted wanting clarity on that. Understanding signals and reading signals, that's going to be very important, especially for the new person who is in the position of earning while you learn. So even in the beginning, with the products and services that iMarkets Live offers, you're able to actually start entering trades once you're comfortable in your demo account. But it's very important that you understand how to read signals, or more specifically, know what to look for to actually enter a trade. And then I'm also going to go through actually entering a trade from the harmonic scanner. And last month or a month and a half ago, I did some training on understanding your lot size, calculating pips, and determining your risk. So we're going to go over that again, because it's a lot of new people on here that weren't on here or even in iMarkets Live 2 months ago. So we'll go ahead and get ready to jump in here. So the first thing I actually want to talk about is understanding candlesticks. So basically, candlesticks tell you how the market is moving and what is actually happening in the market. So if you're looking at your MetaTrader 4 as soon as you download it, some people's may be white and black. I believe white, I recommend changing it to red and green or red and blue, because that's what is used highly in the products, especially like the harmonic scanner. Whatever product you're going to use, I definitely encourage you to edit your MetaTrader 4 to mimic that, so it makes it easier for you to actually be able to follow. So for the purposes of this, I generally use red and green, but if you use the harmonic scanner, is red and blue, so you can kind of decipher where that's concerned. But to kind of talk about the candlestick, so the body of the candlestick is where the movement happens. The color is the color is basically the span of where it opened to where it closed. Now, a green candle generally is a bullish candle, meaning the price is going up. Okay, so as you get on IML TV and different things like that, you may hear them say it's a bullish market, which means price is rising. You may hear them say you're going to take a long. Long means buy, okay, if you hear that. Short means sell. So make sure you make note of that, because sometimes on those calls, they're not going to say buy. They're not going to say sell. They may say go long or go short. So you need to know that go long means to buy, go short means to sell, okay? So what happens with the candlestick is that you have your body. This is where the activity happened from the open to the close of that candle. Now, on candles, sometimes you will have what are called wicks, which are these little lines here at the top and the bottom. Basically, what a wick is telling you is the highest that the price went during this time frame, or the lowest that it went. And basically, where that's concerned, I just want to make sure that you understand that even with the highs and the lows, those play a role in trading. So even though you see these lines, or sometimes you don't, that's telling you something. So I'll show you some examples on the actual real chart of what you're looking for. Okay, so now you have the bullish candle. So then you have your bearish candle here, okay? And it's the same situation, except it opened up top and closed below. But this is the lowest that the candle went, and this is the highest that the candle went. So you can see what's actually happening. So every candle tells a story, okay? And one of the things that you're going to learn too, that I'm going to pull up on a chart. Let me see. I'll go ahead and just show you a chart real quick. So right here is an example of MetaTrader 4 on my computer. Okay. And on this particular chart, as you can see, there's price movement. You can see here, this is D1. So that means this is a day chart, a one-day chart. So what that means is that every single candle represents one day, okay? So that means the new day just started, but yesterday, which is still kind of today for us, but in the UK, it's a new day. Yesterday, this particular pair, which is USD JPY, was pretty much on a downtrend all day long, okay? But the day before, it was going up all day. And so that's kind of telling you what was happening with that pair. Now, the awesome thing about this is that you can trade different time frames to, you know, whatever your strategy. Some people are scalpers, so they may use a 1, 5, or 15-minute time frame. Some people are swings, where they may use an hour for an hour or a day. So it's up to you to kind of determine what kind of trader you are, but it's going to take some practice and different things like that to make those determinations. So let me just go to a 15. Well, let me kind of break this down. Okay, so you have a 4-hour chart here, okay? So that means every single candle represents 4 hours. So this candle right here is going to run for 4 hours, okay? But the cool thing about that is if you go to the hour, 4 of these candles represent what's happening in a 4-hour. So you can kind of see how the candles correlate. It's just kind of allowing you to zoom in on closer points. So if you're on the day chart and you move to a 4-hour chart, that means 6 of those 4-hour candles make up a day chart. You see what I'm saying? Or 4 1-hours make up a 4-hour chart, and so forth and so forth. So that's how those kind of correlate. Now, when it comes to the whole trading strategy, and you learn this in IML TV and things like that, you want to make sure that you're trading with the trend, okay? So let me tell you what that means. Write this down. The trend is your friend. And let me try to explain this the best way I can. Normally what I do, and this is what I do when I'm looking to actually enter trades for the day. If, let's just say I'm looking at USD/JPY, I'll start a lot of times with the day chart. Sorry, my screen is moving for some reason. I'll start with the day chart. So in this particular case, you're looking to see what the overall trend is. For a long time, it was an uptrend, okay? But now you can see it looks like it's starting a downtrend. You have a lower high here. So this was a high, and you have a lower high here. And so it looks like it's starting a downtrend. So for me, I normally trade the 1 hour, sometimes the 15-minute chart. But what that means for me is because the overall trend is down, I'm only looking for selling opportunities. And let me explain to you why, okay? Now, scalpers, on the other hand, because I'm sure we have some scalpers on the line, they're going to look for every twist and turn, every pivot turn, regardless of if it's against the trend or not. A lot of scalpers tend to do that. But that's very risky business, and let me explain why, okay? So let's just say, for example, the day charts, you know, it's kind of showing a downtrend. So I'm over here. Let's go to the 15-minute chart, right? So on the 15-minute, it's pretty cool. It's showing an actual downtrend right now. Let me mute my cell phone, sorry. It's actually showing a downtrend right now. But let's just say we were back here, if it'll stay. Hold on. I have to, it's something. If anybody knows how to lock that or unlock it where it won't.
I do, Camille.
Hey.
Hey, you know, at the very top, if you go to the top, right there.
Here.
Okay. Uncheck that, the one next, uncheck that one. There you go.
Perfect.
All right, now you can go left.
Thank you. You the bomb. I appreciate that. Okay. So let's just say, for example, it's an overall downtrend. And so I'm looking for selling opportunities. But when I'm trading, I see this. I thought I cut it off. Okay. I see this big candle going up. Okay. And when I see this big candle going up, I'm like, shoot, I'm about to get in a buy. So I get in that buy and I'm up here. But next thing you know, I'm not paying attention or whatever happens, it starts going back down. And before you know it, it's already past my entry down here. Because it's a downtrend, it's very unlikely for a long period of time that trade is going to come back to where I can break even. And so this is where people get in trouble because they don't want to use stop losses. They want to wait it out, and then they could potentially end up blowing their account. So in the beginning, to avoid those type of things, look at the overall trend and go with that. You know, that's what I recommend trading on your own, okay? Now, not necessarily trading on your own per se, but like even when you're looking at the scanner per se is looking up reversals, okay? So depending on if you're doing the 15-minute or the hour, the scanner is set up with harmonics to look for reversals in the trend to turn direction. Now, if you're trading the 15-minute scanner, it's very likely that you could end up trading against the trend. It's important to know that. And if you're going to take that risk, keep it as tight as possible. That's the only thing that I could really recommend where that's concerned. Whereas if you're doing the hour or the 4 hour of the day, more than likely you're trading with the trend in a lot of cases. So that's just an extra measure that I definitely recommend. But as you start studying IML TV, IML Academy, and plugging in, you want to make sure that you are actually, you know, just get on the charts and just like go back and look at the history. When they're teaching you strategies on IML TV and stuff, take those notes and then just go back and look at the charts and see if you can find what they were teaching. That was one of the things I did that really helped, you know, change some things. Also, what I recommend too is when you're looking at the scanner and things like that, if you see setups that have a lot of potential, you also want to make sure that you check the news. That's a little advanced. It's not really advanced, but when you check the news, it tells you if any news of a certain pair is coming out. So let me see if I use Forex Factory calendar. And basically with the calendar, I use the red ones, which represent high impact. So tomorrow at 8:30 in the morning, Eastern time, I am Central time. So tomorrow at that time is going to be some news at 7:30 a.m. Canadian dollar. So high impact news means that the market could kind of go crazy. Now, I know some of y'all bag the news. I even be bagging the news. But what I'm saying is if you're using the scanner or you get a swipe trade or, you know, something from Dr. Kathy, like keep those kind of things in mind. This is just little things here and there that you can use to protect yourself. But I love trading news. Plug, shout out to Cam. Anyway, so I just wanted to kind of show you guys that. So let me go back to my slides. If anybody has any questions on that, you can post them. I'll be happy to answer those questions really quick. But if not, and it's pretty clear, we'll keep it moving. So you can, just to kind of recap a little bit, so you can kind of see, this is a 15-minute chart. So basically a new candle just formed here because it's 9:16. Let me go back. Okay, here we go. So a new candle just formed here. So it's still in the bullish. So at 9:30 or 10:30 Eastern, another candle is going to form. So that's how the candles work. But if you're on a 30-minute, it's going to happen at 9:30, 10 o'clock, 10:30, and so forth. Because some people are asking that question. And also, for those of you who are using the harmonic scanner, some people were thinking that if you trade the scanner on a 15-minute, that they thought they were doing something wrong if they didn't get out of the trade in 15 minutes. That's not the case. It's just looking up setups based off of those time frames for reversals. A lot of times 15-minute time frames can happen a lot faster than the larger time frames, but there's not a set time that you actually would be out of that trade. So just wanted to make sure I was clear on that. Okay, so candlesticks, bodies, everybody's good on that. If you're good on that, type a 1 in the chat, type a yes, type something so I know that y'all are following and that y'all are good with that. All right, perfect. Okay, excellent. Appreciate that. All right. Okay, so now just basically wanted to touch on reading signals or understanding signals, because a lot of people are like, I don't know what I'm looking at. I don't know what I'm looking for. Hold on, somebody's writing on my screen. Turn that off. And let me delete. Okay, there we go. All right, cool. All right, so basically it's three things you're looking for whenever you're getting a signal. So that means whether you are getting a swipe trade, whether you're on the scanner, whether you're getting it from Dr. Kathy, whether you're getting it from Swipe Coin, wherever you're getting it from, there are three things that you're going to be looking for in the beginning. And this is for newbies who don't really know anything. We're trying to make this as simple as possible, okay? Because if you can just follow instructions, it puts you in position to earn while you learn. Now, remember, past profits are not indicative of future results. So there's no guarantee that every signal, every trade that you get into is going to lead to profit, but it's very highly probable. It's probably, I would say, like with the scanners, about 85% accurate, which is super strong, you know. And so just making sure that you actually understand how to enter a trade. Okay, so what I'm going to do, so when you're looking for a trade, and I'm going to use the scanner for tonight specifically, you're looking for the entry price, the stop loss, and the take profit. Once you have those things, you're actually ready to enter a trade. So let me pull up the scanner really quick. Let me blow this up so you all can see. Okay, so can you all still see my screen? If you can, say yes or no. It was doing something funny just now.
Yes.
Okay, perfect. Thank you. All right, so basically with the harmonic scanner, this is you're okay. I think somebody just posted that in the chat. Okay, so this is actually a great setup that we could enter. Let me zoom in really quick. Okay, so yeah, so actually, I personally would wait until this candle turns red before I would actually enter the trade to confirm movement in the right direction. So I'm gonna watch this particular trade for a red moving candle. But one thing that I do is add Bollinger Bands. So if you look at this indicator right here and just click here and go to Bollinger Bands, you leave it at the same settings that it is. From the looks of it, it looks like it is at the top of the Bollinger Band, which is also an indicator of a sell. So this is actually a good trade to get ready to enter. A couple of things, because of where the Bollinger Band ends, and this is just a strategy that I learned and that I like, because if you notice, the price technically stays within the Bollinger Band. Sometimes it'll go back out, but that's a strong support and resistance zone. It'll come right back in the Bollinger Band. So when I'm determining on a scanner, if I'm using take profit 1, 2, or 3, I see where the Bollinger Band is. So in this particular case, the Bollinger Band, take profit 1 is within the Bollinger Band. So I would enter take profit 1 as my take profit. Okay, so with this particular candle, it looks like the bears are pushing down on price. So some people may go ahead and enter. It actually, let me see. And then looking at the RSI, which is pointing down, that's also another indicator of a sell. So I'm actually going to go ahead and enter this in my phone. So I'm going to actually just share, well, I can't share both, but I'm going to just go ahead and enter this trade. Then I'm going to go through and show you how to enter a trade. So what you're looking for is your entry. As I mentioned, you're looking for the take profit, and you're also looking for your stop loss. So sometimes you have to adjust your screen. So the stop loss is here. So the awesome thing about the scanner is it gives you all the numbers. All you have to do is copy and paste what you see. So you see here the entry is 1.51643. You're going to type that in. Let me write these down so when I show you how to enter the trade. And with these particular scenarios, if it's in position, you want to get as close to this amount as you can, but you're going to actually just enter a sell. You're not setting up a pinning order. I used to do a lot of pinning orders with the scanner, but I've actually, can you guys hear me? Somebody said they can't hear.
Yes, we can hear you.
Okay, so they may need to just readjust their speakers. Okay, so what I do, I don't enter pendings anymore because I like to see where it is in conjunction to the Bollinger Band. Sometimes there'll be trades that come through, but when those trades come through, the Bollinger Band is way higher. So that means that price has potential to go up even more before it goes down. And so I just won't take that particular trade. So the goal is to get as close to the entry as possible, but you want to wait for a couple of confirmations before you actually enter. So for me, once the D here hits the entry, that's my key to watch. But my entry when I actually enter is when the candle that formed is actually going in the direction that I want the trade to go. So because this is a sale, so the reason you know this is a sale is because where the entry is, the take profits are going down, which means you make money as the price goes down because you're selling. I'm going to look for a red candle before I actually enter that trade. So I would still continue to watch this trade before actually entering it. But entry point, it gives you your stop loss and it gives you your take profits. So remember, you have take profits 1, 2, and 3. It's totally up to you which one you choose. Most of the time I would go with 2, but now using the Bollinger Bands, I pick my take profit based on how the Bollinger Bands are structured within the price action. So yeah, so that's that part. So now let's actually enter a trade. So I have to stop sharing my screen really quick so that I can share my phone, because we trade on our phones, majority of people. And so let me stop sharing so I can share my phone with you and show you how to enter a trade. Okay, here we go. Share. Okay, so you should be able to see my phone screen. This is a demo account. I'm testing out a new strategy in here. So basically, to actually enter a trade, this particular pair that was on the scanner is Euro CAD. So if you don't see a particular pair up there, you're going to hit the plus sign, and then you can just search for it. So Euro CAD, so you hit the plus to add it here. So if you get an alert from Swipe Trades, you get an alert from Dr. Kathy, wherever you get the alert from. Once you have all the information, you come to your MetaTrader 4 app. You are going to go to the pair, which is EuroCAD, and tap on it. On the iPhone, it says trade. On the Android, it says new order. Okay? And then you click on it, and it takes you here. Market execution means that you want to actually enter the trade immediately. Now, I don't know if any of y'all are looking at the harmonic scanner, but that candle is still going up. It's now broken through the entry, broken through the Bollinger Band, which is another sign, and I'll show you this in a second, that it's about to drop. It has potential to drop any moment. I'm not an expert yet to say I know it's going to drop, but it's highly probable of that dropping. So anyway, so market execution is basically entering the trade at the current market price. So as soon as you hit buy by market or sell by market, your entry point is going to be whatever the price is once you hit that point. Now, just so you know, for all the new people, if you happen to get Swipe Trades and they tell you to do a pending, like a buy limit, sell limit, buy stop, sell stop, you just tap on market execution and it gives you those options. So literally, whatever they tell you to do, you're able to come here and do. Okay, so, but for our purposes, it's a market execution. So we're good there. Here, where this 0.03 is where you change your lot size. It can be anything from 0.01 to whatever you want it to be. I'm going to do 0.10. Based on the harmonic scanner, it would be a sale. They've given us our stop loss, and the stop loss is 1.51918. And then the take profit, like I said, take profit 1 is what I would pick, is 1.51424. Okay. And then I would actually hit sell. Okay. So I would actually hit sell. This is my demo, so it's not a big deal, just to show you how to enter a trade. So you would hit sell. But in my live account, I would wait. Okay. just so y'all know. So I'm going to enter this trade, but I'm waiting on the turn before I actually enter it. Okay, so so now you can see the price moving. Okay, so if you wanted to close this trade, you just swipe to the left and you hit the check, and it asks you to close with a loss. I don't want to close with a loss, so I'm actually going to leave it open currently. So that's that. So some of you all may want to go ahead and enter the trade. Some of you all may want to wait. Okay, so someone said, do you wait and do market execution, or do you put in as a sell stop? I wait and do a market execution. I used to do pendings, but I don't anymore. I try to get the perfect entry, which is like my ultimate goal. So doing the sell stops, like if we would have did a sell stop, let me go back to the scanner so you can see that. Hold on. Okay, so like if we were to do a sell stop on this one right here, you can see it would have entered us here at this entry point, but now the price is still going up. So that's why I wait until I get that confirmation candle. So this is an actual 15-minute chart. So that means in 1 minute, a new candle is going to form. So when that new candle forms, I'm going to look to see if I see a solid red candle forming. It doesn't always work out 100% because sometimes it can go red and then a few minutes later turn back blue or whatever. But that's what I'm looking for, a red candle, which is my indicator to sell. So a new candle will start here in a second. And then let's just see what happens. So you see it jumped up. So what's actually happened now, it went beyond what the scanner projected, and then the actual how did that move like that? Did y'all see that? Did it pick another pair? I don't know what happened. Hold on. Yeah, it just almost hit my stop loss. So looks like normally when the patterns move like that or something changes, it's because the price goes outside of what was projected or predicted. So I would have never gotten in this trade because I didn't see that downward. So now you see it's still moving up. So it wasn't technically a good trade. So we just happened to see one that actually didn't work. So anyway, I hope that's clear. If y'all have questions on that, we can revisit that. So just to continue to go with our objectives, now I want to talk about maximizing on the alerts that you receive. Maximizing on the alerts you receive, determining your lot size, understanding and calculating pips, determining your risk. Those are all things that are important for everyone starting out in trading, just across the board. Some of you all may have seen this part before, but we're going to go through it again just as a refresher for some and new for others. So basically, one of the keys is understanding the lot to pip relationship. So basically, pips are a change in price of a currency pair. It's the smallest unit by which a price can change. It's easily identified by the two big numbers on your MetaTrader 4 app. I'll show you that on the next screen. Lots determines how much money you gain or lose with every change in a pip or the currency price. So those two pieces are very important and they work hand in hand with each other. So let's talk about pips. So for example, if you look at Euro USD over here, you can see the second column, it has 1.16072. So that 07 in MetaTrader 4, make sure your MetaTrader 4 is on advanced, okay? Because that actually will allow you to see this. If you have it on simple, everything is the same size. You can't really decipher. You won't really know. All right, so with the Euro USD or any of these pairs, you see 07 is the big number. So that means that is the pip, okay? That small number 2 is like a pipette. So think about a millisecond to a second. That's kind of how those two work, okay? So in this particular case, because some of you all or most of you all are actually on our team app. And so you may get alerts from Dr. Kathy, and she may say, buy Euro USD, take profit 10 pips from your entry. Some people probably lost, like, what the heck does that mean? You know, especially new people. So this is a quick piece to help you. So if it is a buy, the 0.07, so remember the 0.07 is your focal point, because those are the pips. That's the big number. So if it's a buy and she gives you an alert and it says 10 from your entry, you're gonna add 10 to 0.7, okay? And that's gonna give you your new take profit. You keep all the other numbers, okay? But you just add 10, but put 10 right under 0.7 to do the math. And then if it's a sale, you're gonna do the same thing, but you're gonna subtract 10 under the 0.7. So with that being the case, somebody tell me for this particular pair, what would that take profit be? You could type it in the chat. If you were doing Euro USD, it was a buy, 10 pip take profit, what would your new number be? Let's see, we got 1.161. Excellent job. Good job, Sonia. Okay, good job, Rosanna. Excellent, excellent. All right, now if it was a sale, all right, Tanya, I see you. If it was a sale, what would that take profit be? So you would subtract 10. This one gets a little tricky, but I know y'all got the answer. Excellent job, 1.1597. Excellent, excellent. Okay, so y'all kind of get that. Okay, I got it. Excellent. Now I see somebody, Samsung, raise their hand. I think that's what I saw. You can unmute, Samsung. What question you got? Valerie, I got you. I knew what you meant. Okay, I guess they don't have a question anymore. All right, excellent. So let's keep it moving. So that's that. Now, just some practice. Everybody know I like to practice. So I got these examples. Go ahead and look at these real quick. 10 pips, take profits on both, on all of these. Tell me what the buys and the sells are for each one. Take profits if you were buying or selling. And just type it in the chat. Get this good old homework in, because I want to make sure you got it, because what happens is, and you'll hear this a little later at the end, when you're looking at the scanner or you're looking at the swipe trades, as I mentioned, your lots and your pips play hand in hand. So if you know how many pips you're risking to gain and you know your lot size, you'll know how much money for real. You know, it's not like just a guessing game. So Euro USD, 1616, okay. 1596, okay, good job. All right, UJ and UCAS, somebody tell me what those are. Then we'll keep it moving. I ain't gonna wait too long. I'll go ahead and pop the answers up there. But I wanna make sure everybody got it. If you don't have it, say wait or go back. Like, tell me. Don't sit on there and be lost.
Can you go back?
Yeah. Which part you want me to go back to?
Go back on how you subtract and add. What are you subtracting? Is it 0.10? Is it 10? I'm not clear on that part.
Okay, perfect. I'm going to draw on my screen. Well, not really draw, but I'm going to type on my screen. Give me 2 seconds. So let me give you a real example. Okay, so Euro USD is 1.16062, okay? And so you have this 0.6, which is the pip. So I tell you that you're gonna buy Euro USD. I want your take profit to be 10 pips. So what you're gonna do is come here, and I'm just gonna put these fillers in here. so you can kind of see, okay? So what happens is your goal is to put 1 0 under here. You see what I'm saying? So you line your 10 up under the big numbers.
Gotcha.
Okay. And then if it is let me put a space here. If it is a buy, you want to add. Okay. So you're going to add, just do real math like you learned in school. So the 2 going to come down. So you got 1.16162. And I'm going to make it big so you can kind of trying to make it. So in real life, if you did regular math, 2 plus 0 is 2, 6 and 0 is 6, 0, 1 is 1, 6, 0. So you're pretty much just putting 10 under 0, 6 and just add in real life or just subtract in real life. Does that make sense?
Yes.
Okay. The other person that asked me to go back, Lavencia, does that make sense?
Yes.
Okay, perfect. All right. And so the same thing with the sale. If this was a sale, you would do 2 minus 0, which is 2. 6 minus 0 is 6. 0 minus 1 you can't do. So you know how like you borrow from the 6 and it turns
absolutely. Yeah, it's just basic subtraction.
Exactly.
Okay.
So yeah, so that's basically how it works. However many pips you going for, you take that number and put it under the big numbers and then do your basic math.
Okay.
Okay. Awesome.
Thank you.
Absolutely. You're welcome. Okay. So let me see. I think I saw some people put the other answers out there. Let's see. 110.5574 sale. And then 110.7574 buy. Perfect. And then UCAD. Anybody got UCAD for me? Or did I miss it? I don't see it out there. Okay, the buy 1.32118. Okay, yes, Sonia, I got you. And then the sale 1.3. Yeah, I messed up here. Excuse me. Oh no, I didn't. I got it right. My bad. Okay, so just to kind of go over the JPY pairs. JPY pairs are a little different. Let's see if I have one on here. So basically with the JPY pair, it works the same way, except your pips are the first 2 digits and not the 3rd and 4th space. So literally it still works the same, except when you're calculating, like if you just focus on MetaTrader 4 and where the big numbers are, that's how you can trade. It does not work for commodities. So oil and gold, this doesn't work. This is just for Forex currency pairs, okay? But commodities and all of that, this doesn't work for. It's a whole different ballgame with gold and oil and Bitcoin and all of those things are concerned. So what you're learning today is the basic for the Forex. So yes, with Sonya, with the USD, like with the JPY pairs, the 2 places after the decimal are where your pips are. So you would just put your 10 under there. So hope that helps. Let me know if I need to go into that a little bit more. Okay, so now let's talk about lot sizes. So you have 3 different types of lot sizes. You have your micro, your mini, and your standard. So your micros are anything from 0.01 to 0.09. Your mini is anything from 0.10 to 0.99. Your standard is 1.00 and up. The larger the lot, the greater the reward, but it also can be greater loss as well. So this is just a basic lot size breakdown. I just picked some of the common lot sizes that people utilize. So I want to make sure that we're clear on this because I don't see it as much on social media anymore because of compliance and what we can post. But I used to see so much people be like, oh my gosh, I just turned a penny into $20. When you really didn't turn a penny into $20, you turned 10 cents into $20, you know? And so stuff like that, you want to make sure that you're using a proper lingo and, you know, saying stuff properly, because what happens is it makes you look like you're not really engaging in the education. I'm sorry, somebody keeps unmuting themselves. Hold on. Okay, so here it just gives you a basic breakdown. Now these are not the only lot sizes you can do. You can do 0.03, 0.25, 0.29, 0.67. Literally any number out there that you want to do, you can trade. But I just put some of the basic common numbers that you would tend to see. So just to kind of practice a little bit. So let me go back. So if you notice here, the way that you determine the dollar amount is basically moving the decimal place one place to the right. So 0.01, one place to the right is 10 cents. 0.05, one place to the right is 50 cents. 0.50, one place to the right is $5. 2.00, one place to the right is $20, and so forth. So looking at this here, see if somebody had a question. If you have $1,000 account and you want to trade $1, it's going to be 0.10. That's what you would actually enter. Okay, I see Latanya out there giving me these answers I'm giving my life. Yep, 30 cents, $1.20, $2.30, $3, $12.50. Get it. What we got for the other five? What's going on? $5.50, $7.40. Okay. $100. I'm about to say $10. $57.50. Okay. And $2,000. Awesome job, Latanya. Shout out to you. Does that make sense? She just went straight through those. Did that make sense for y'all? If it made sense, press 1. If not, let's talk about it. All right. Excellent. All right. And so what we're about to do now is put it all together though, because this is where it kind of makes a lot of sense. So those were the answers right there. Oh, you need to unmute. Give me 2 seconds. I locked the muting because people kept unmuting themselves and not saying nothing. Hold on. Okay, you should be able to unmute yourself.
So I thought you said initially that you moved the decimal 2 places to the right.
Just
Did I misunderstand?
Yeah, 1 place.
1 place to the right.
Yes.
Okay.
All
right, that was my only question. That was my only question. So that was confusing me with how you were coming up with those numbers, because I thought it was 2 places to the right. But I see it. Like 0.03 would be, I see how you got 30 cents per pip. Okay, I got it. Thank you.
All right, you're welcome. Okay, so now let's practice this together. So we're bringing it all together now. So what we're actually doing is I'm giving you an entry point. I'm telling you if it's a buy or a sell. Okay. Your take profit is going to be 10 pips. So I want you to tell me, based off of the take profit pips amount and your lot size, what your take profit price would be and what the profit will be. I hope that question didn't confuse y'all. Amanda, I'm not sure what your question. I'm sorry.
I think maybe what was confusing, like when you're looking at moving your decimal as far as to calculate your take profit, that's where you move the decimal 2 places, correct?
Well, not for your take profit, but to determine your lot size, like how much money you're risking per pip. But as far as like your stop loss and take profit, you don't move any decimals for that. Whatever you get from the scanner, you type that in exactly the way it is. Does that make sense?
Yeah, like when you were talking about the JPY, like that one, it's 2 decimals over, correct?
Right. Well, it's not 2 decimals. Let me go back to that real quick. So on the JPY right here, these two spaces behind the decimal are the pips. So you're not necessarily moving decimals, but when you're adding your 10 pips, you're going to put 10 under the 6 and the 5.
Right. I think that's where it got confusing on quote decimal talk.
Gotcha. Okay, yeah, the only time we're going to look at moving a decimal place is when you're looking at the lot size.
Gotcha.
Okay. All right, so Valerie, I see you out here. Okay, so to take profit, you put 1.15962, which is correct because it's a sale, 10 pips. And $2.50 per pip with 10 pips is $25. Excellent job. Jamil, okay. Euro USD, got it. Perfect. Proud of y'all. Let's get it. All right. Who got AUD USD? Let's talk about that. Let's see those answers. Somebody else go ahead and jump to GBP USD, and somebody go ahead and jump to NZD USD. And let's see what y'all come up with. Anybody? Okay, GBP USD, take profit. 1.32905. It's a buy, correct? 420. 42. Okay. All right. Excellent job, Valerie. Sonia. Let's see. She's working on AUD USD. 74506. Buy 10 pips. Lot. Okay. What's the profit, Sonia, on the AUD USD? And then NZD USD. Let's see, Amanda. You're working on NZD USD. All right, that's 10, 100. Okay, 6.9. It's a sale. 3.1. Okay, I just need to know what the profit is on that AUD USD, but all the other ones are right. Excellent job. Okay, $9. Okay, perfect. Excellent. Y'all getting it. I'm super excited. Is this helping you guys? Like, is it helping? Okay. All right, excellent. So those are those answers right there. Okay. So now, determining your risk. Okay. So we're determining your risk based off of your account size. You definitely want to not over leverage your account. If you need to unmute yourself, just raise your hand and I'll unmute you because I want the call to be clear, but a couple people keep unmuting themselves. So I just locked the unmuting part. Yes, it's definitely recorded. I'll place this in the team app tonight so that you all can get access to that. Okay, so determining your risk. Yeah, let me go back to answers. And while I talk about this, so while determining your risk, you want to make sure that you look at your account size. Don't get caught up in the hype of seeing people, you know, doing one trade and making $1,000 or, you know, that you over leverage your account. The goal is to start somewhere and grow your account. Okay. So you want to not be anxious, be very strategic. Don't be emotional trader. When you're an emotional trader, you tend to lose. Like, also, for those of you all who haven't funded your account and looking to fund your account with money that you can lose. Don't fund your account with no rent money, no mortgage money, no car payment, none of that, okay? You want to make sure that you, you know, just use proper risk management and don't spend money that you need for something else. Okay, so just with this example really quick, I wanted to kind of show you what's not a good idea versus what's a good idea. Okay, so for example, I have some people who don't use stop losses or some people who would do a huge, not even do a huge stop loss, but if you don't do a stop loss, sometimes these pairs can go down 100, 200, 300 pips over a short period of time because you're not using stop losses. You can blow your account. So like if you have a $500 account and you're going for 10 pips, okay? Let's just say you have a lot. So these are two examples of people with $500 accounts, okay? So with these particular accounts, they're gonna one is gonna use a 0.50 lot, which is $5 a pip. One is gonna use a 0.10 lot, which is $1 a pip. So while the person who's using the bigger lot, if that take profit of 10 pips hits, they made $50 compared to that person that made $10. The reality is all trades don't always hit 10 pips. Sometimes it's gonna drop. It could be news or something else that factors in to makes that happen. So let's just imagine this particular pair. It was, going in an uptrend, and then all of a sudden some news happened. So it dropped immediately 100 pips. Now, with a $500 account, if that thing dropped 100 pips and you had a 0.50 lot, you just blew your whole account because of that drop. Now, if you had a $500 account like the person on the right, and it dropped to 100 pips, you would be down negative $100, but your trade would not even close because you're still in a good position. So this is just an example of why, unless you actually had a 100 pip stop loss listed. But this is actually an example why you want to use proper risk management. Honestly, for me, that's the question I ask myself. When I'm choosing a lot that I want to trade, if this trade goes against me, I give myself 200 pips. I'm like, if this trade goes against me 200 pips, what will my account look like? And that's how I determine what lot size I pick. Am I okay with this amount if it hits negative 200 pips? I probably would never get it that way, but that's just a frame of mind, because sometimes I don't enter stop losses. Sometimes I do. But if I don't enter a stop loss, am I okay with it getting that low? Would I be willing to take that L, or am I going to just be believing God is going to turn around and hopefully I don't blow my account? So you want to be strategic. Don't just be out there being overly risky, and stuff like that. So I hope that was helpful. Let me see if I got any more slides. I think that's my last slide. So basically, someone asked me if I could explain over leveraging and margin. Okay, I got it. How do you determine which pairs you see? On my demo account, I placed a trade and now I don't see it on the scanner. So what happens with the scanner, yes, believe in God, be praying over here sometimes, but with the scanner, what happens is you get a trade. If that trade goes against you, and it breaks outside of what the harmonic scanner predicted, that particular signal will expire. So it'll delete, it'll go away. So that's probably what happened. Whatever pair that you went into, it probably expired because it went way beyond the D entry point per se and didn't do what was predicted. So, okay. Let's see. Yes, Chris, send me your email address, please. Yeah, that's what happened with Eurocat. Okay. The average stop loss for beginners, I would say go with what if you're getting like a Dr. Kathy trade or something like that. The key to the stop loss is you really don't want to risk more than 1% to 3% of your account. Okay. So let's just say, for example, you have a $500 account. 3% of 500 is $15, I believe. Is that right? Yeah. 3% of 500 is $15. So on one trade, the most you want to risk is $15. So that means if you do a lot size of 0.10, which is $1 per pip, then you need a 15 pip stop loss. So that means if that trade goes against you 15 pips, it closes you out at $15 negative. That's how I normally teach new people. Some of my business partners and other traders tell them to do bigger stop losses, which is fine, but I just want you to understand the correlation between the stop loss and the lots and pips. So for example, if you were to do a 50 pip stop loss on that same trade and it hit, you would be at a loss of $50, okay? So I tell people, think about the number that you want to risk or that you're willing to lose on a trade. The goal at the end of the day is for you to actually be able to enter a trade and say, once I enter this trade, if I'm no longer looking at my phone, I know that either I'm going to lose $15 or I'm going to make $60. That's the ultimate, because I know when I first started, I didn't understand the risk to reward, lots, none of that. And so I spent so much time staring at my phone all day because I didn't know what I was risking. So that's one of the things that you want to do. As far as the spread is concerned, and I'm still going to get to the question on the over leveraging and margin. I'm just trying to get some of the more easier questions out the way, but I didn't forget. As far as the spread, let me share this screen real quick. I think I need to show it. Let's see. Spread, here we go. Okay, so as far as the spread is this number right here. So these numbers are points, okay? So the goal is to actually trade pairs that have a spread, I say, of 20 or less. Some people say 30 or less, okay? So basically, these are points. So every 10 points is 1 pip. So for example, with this first pair that we got up here, which is USD CHF, the spread is the difference between the buy and the sell price. So this particular pair, and spreads do change. Brokers manipulate them and change them when news happens and stuff. So you want to be able to watch for that. But USD CHF is 1.1 pips. So that means whenever you hit buy or sell, your true entry point is going to be 1.1 pips from where you actually entered the market. So the person that said they kind of get caught up with the spreads, you want to watch that. Because sometimes they'll manipulate. I was trying to see if there's any big spreads over here. Sometimes they'll manipulate and have 78 as the spread. So that's 7 pips. So that means that price has to move 7 pips in your favor before you even get to a break even. That's how the brokers make their money, through the spread. So I hope that actually answered that question, where that was concerned. Let's see. So Amanda, you said you could still see EuroCAD on the H1. Yeah, and so that actually happens a lot of times, as I was mentioning earlier in the call, H1, H4, D1, those tend to be strong trend trades, whereas your shorter time frames, like the 15-minute and such, the scanner catches every turn, so every reversal. So even if it's so the ones that expire most of the time are trades, signals that are going against the trend. So for example, EuroCAD, let me just look at EuroCAD over here. So here we go, EuroCAD. I don't want to trade. I just want to look at the chart. So EuroCAD is an overall uptrend. Nope, that's a 15-minute chart. Let's go to the H4 just to confirm. So it's pretty much an uptrend. And so remember, the EuroCAD on the 15-minute was a downtrend. It was a sell. So that particular signal, from what I was talking about earlier, was going against the trend. So that was what caused it to expire. because it kept going in the opposite direction in that trade. So a lot of times I do see the 15-minute time frames tend to expire a lot. Let me go back. Brokers, I have Traders Way, I have LMFX, I have Hugo. I kind of use multiple traders for different things. I was using JFX, but I just recently stopped using them. Hugo is a new one that someone just shared with me earlier this week, so I don't have a whole bunch of, am I still breaking up? I don't have a whole bunch of insight on Hugo right now to give any insight, but Hugo does allow you to trade crypto. So they are a new replacement of JFX, you know, so Hugo allows you to do Forex and crypto, which is pretty cool. It's Hugo's way, sort of like Trader's Way, but it's Hugo's way, HUGOS way. Okay. If you place a trade and it expires, how do you find it? It leaves the scanner, period. Like, it goes away. So it's not like a way to find it. Are y'all talking about downloading the scanner on your Mac? Oh, how do you get MetaTrader 4 on your laptop? Mine keeps trying to download 5. Do you have a Mac or a PC? Okay, so for a PC, whatever broker you're with, all you have to do is just go to that broker and go to platforms and click on MetaTrader 4, and it'll give you a download. Max, which is what I have, is a lot more complicated, but I did find out that FX Choice, you can go and download MetaTrader 4 for Mac from them without having to do all the extra. So, so I downloaded FX Choice, but I was able to connect my other brokers to it. It was just FX Choice's MetaTrader 4. So I hope that helped. Now, with regards to the question, of the margin. So basically, different brokers, based on the type of account you have, has different margins. Okay. And so a lot of times when you enter a trade, let me share my screen, my phone, so I can show you this. Let's see, share my phone. Okay, so this is that harmonic scanner trade. It just ain't hit my stop loss yet, and I wasn't paying attention. But you have here what's called free margin, which means I can still enter trades. Whenever you see free margin, that's letting you know you still have some space to play and actually enter trades. If that ever gets to 0 or whatever, then you can't enter any more trades till you close some stuff out in profit or whatever. Now, your margin level percentage, that's telling you the percentage of the margin that you have available. Now, different brokers have different parameters, but once you get under 100% and you start getting lower, your numbers turn red, and that's a sign that you're about to stop out. So basically, stopping out means that when you get to a certain percent, so you don't blow your whole entire account, the broker gonna start closing out positions, and they make money that way. So that's another reason why you want to be careful with the lot sizes that you use, so you can make sure that your account can actually handle it. I know some of TraderWay's accounts, once it gets to 80%, it starts stopping you out or closing your trades. Some of the other brokers might do 20% or 40%. You would have to get with your broker to find out what that stop out percentage is. And your goal is to stay away from that so that you don't, have different things stopped out for whatever reason or another. So the key is, if you can understand the risk to reward, and like I said, if your account went negative 200 pips, could your account still handle it? That's something that you want to ask yourself when you're actually entering trades, because that can actually help you with regards to not putting yourself in position to stop out. So, yep, Hugo does take cars too. Okay, so does anybody have any last questions? We've been on for an hour. I don't want to keep y'all too long, and I want to take a nap so I can get up and trade London. But I'm not going to rush if y'all have any other questions. Which strategy have you used, would you say, yields the most consistent profits? The strategy I showed where the scanner was concerned has yielded me the greatest profits. There's a new strategy that I've just started to learn today. All of my trades have hit profit so far. So I'm going to test it out for tonight, tomorrow, and all that good stuff. And we'll kind of go from there. But the scanner, I'm going to do a scanner training next week. So be on the lookout for that. But yeah, so the video will be available either tonight or tomorrow for sure on the team app. And also you can subscribe and follow me on YouTube, Camille Westmoreland. I do different, I haven't done it in a while, but I've been working on some different trainings and videos and stuff like that. So you'll get notifications whenever I post those. So I love you guys too. Thank y'all so much for your kind words. I really, really appreciate it. Let me see. Somebody asked one last question. Did you say if you have a swipe trade on the H4 chart, does it take 4 hours? It doesn't take 4 hours to hit. Basically, the bigger the time frame, a lot of times the longer that trade may be in action. So like a 4 hour or a day chart, you might be in the trade for a day or 2 days or 3 days, but then depending on how fast the market is moving, I mean, it could be within that 4 hour time frame. So that's how that works. As far as seeing the spread, if you're looking on MetaTrader 4, sorry, hold on. If you're looking at MetaTrader 4, then it's, let me go back. I closed off on my phone, I'm sorry. Okay. So if you're looking at MetaTrader 4, here, you go to quotes, and right under quotes, you see the spread right there. So you can see it right there. That tells you what the spread is. So make sure that you have your MetaTrader 4 set to advanced so that you can see that. All right, guys and girls and fellow traders, thank y'all so much for jumping on. I will make sure I get the recording up within the next 24 hours for you to rewatch. Be on the lookout. I'll be doing a scanner training next week. Also, if you have any other questions or things that you would like for me to cover on the next training, please put those in the team app so I can kind of, you know, structure a training around your needs. So I'm excited about your success and your growth, and I look forward to hearing your testimonies from the training and all that good stuff. So we are going to wrap up tonight. Happy trading for those of you who are going to get up like me at London and get some trading in. So y'all have a good night. God bless. See you on the Leadership Call Monday.